Welcome to Trading Lounge and the indices, and Trading Lounge has a free week from the 14th to the 21st of April, so if anybody's interested, please go to our homepage. Thank you. And okay, starting with the S&P 500 here on the weekly chart, this is basically where we are here with 1 and 2 from these October. Most of the markets that have been pushing up have been sort of October and November, and some even as late as December, and some of the banks even later still, like Bank of America. But generally speaking, this low and this trend is pretty much the same for most markets, be it banks or be it tech stocks. In this case here, we've got 1 and 2 and 1 and 2 because we've got this overlap here. The NASDAQ can be counted differently. And then we have this long train coming up into the third wave here. And yeah, so let's just take a look at that on the daily chart. But basically 1 and 2 here, then 1, 2, 3, 4, 5 with the third wave, fourth and fifth to make wave 1 up here, and then we'll have a larger wave 2 and then moving up higher at that point. So it's going to go from the weekly to the daily. And this particular pattern here with 1 and 2 and 1 and 2 as we've just been out, then we're into this third wave here. This is very much like, I know folks think that the tech stocks are sort of creating all of this, but the banks are there too. So we've got Morgan's here with 1 and 2 and 1 and 2 also creating the overlap here. Well, the banks created the overlap. We didn't see that on the tech stocks. And then we've got from wave 2, we're going up into wave 3 up here. So it's very sort of similar. So I'm just going to point out that here we need 1, 2, 3, 4, 5 up here for the third wave, and the fourth wave to come into play here, and then there'll be the fifth wave. This fifth wave could be higher. Anyway, we'll just take it as it comes, and then there'll be the fourth and so on. So it'll be a bit like this here. Now, I may be able to shorten this up a little bit, but in a nutshell, this is kind of it. Now, obviously, the markets are very different when we've been through all of these are 1s and 2s at this point, and now this part of the trend here will be 4s and 5s. So it will be a different beast, and it's also a little bit more difficult to navigate 4s and 5s as well, because wave 4s can get a bit complicated. But from this particular low here as 1 and 2, and then 1, 2, 3, 4, 5 up for the third wave and the fourth wave here, this is really where the S&P is at this point. Now, some of the tech stocks are also in front of this a little bit, and there's other markets that are lagging, and there's some markets that are kind of way out in front actually. And even though that Apple has been quite bearish lately in terms of its patterns, it's actually kind of way out in front. A little bit unusual, but I talked about that in the tech stock video today. But this wave 2 to wave 3 here, this is really what we're looking at in the S&P here. So we'll be looking for a move and then some type of... Hi there, we've got a great opportunity coming up on April the 14th to the 21st. It's going to be a free week for Trading Lounge. So you'll get access to 6 analysts that cover most markets, Forex, ASX stocks, trade recommendations for most markets, a great social chat, great education, currencies, commodities, swing trading, and so on, sectors, US sectors and US stocks. So it's a great little opportunity to check out Trading Lounge, absolutely no cost whatsoever. Just put in your name and email, and I will respond with you for your logins for April the 14th to 21st, and that will be at tradinglounge.com. So look forward to seeing you on the inside. I've probably drawn it too big here, but you kind of get the idea here, you know. So yeah, I mean, if you're trading stocks and those sort of things, you've got to kind of consider getting into these 4s and 5s at this point. So over to the S&P here, it's the same thing as well, 1, 2, 3, 4, 5 for 1 and 2, and then I've got this here as 1 and 2 and 3 and 4, and we'll have to take a closer look at this, and then going up for wave 3 here. So basically we're just looking at this point as going from this low here up to 5 for 3 here, and then wave 4 here. Now, I've probably dramatized it and it's made it a little bit bigger than I should do, but if you know the trading levels, we've got the major level 5 here, and and group 2 below here, we normally just give that a bit of splash of color there just as a design thing, but group 1 and group 2 here. So if we get support on top of 5,300, then we won't be pulled back to this point. But while this is in this process here, we'll be looking for a pattern like this here, if this is the 5-3 here. So this will be where we can go long again over here. So this wave 4 here, when we go wave 3 up here and ABC for back for wave 4, it's how big this is going to be here that we'll need to look at. So this will be the top here, and this will be the ABC pattern coming into play here, so to speak. So we'll look at how deep that comes. It might be 5,150, which is quite common, and there's also a lot of support in here for that. It could come down a bit lower. It could even come right down to this point and then bounce off at this point. It could do that. So we'll just see how it goes, but we're just tracking this little 5 waves up here. So let me go from daily to 20k ticks in here, which is sort of intraday, and I can kind of space this out for us here. Now I think this correction is done here, so I think we're looking at a little 5 waves up here, and then we'll be looking for this will come back into support somewhere in here, I guess, and there'll be this, and I just don't know how far this is going to come down. Like I said, normally 51.50 is kind of a good place for that. We'll see. We'll just have to navigate that as it unfolds, that's all. Okay, so I don't know about that, but in terms of our trading, we'll be exiting at the 5,300 at this point, and then we'll have this wave 5 up here, of wave 3 up here, and then a larger wave 4 here. So all the kind of ending sort of patterns that are coming into the market, you know, end of trend sort of stuff, from 20,000 ticks down to 1,000 ticks, just to drill in here a little bit further, bring in a bit more data here for this. So bit of a long journey here. So I've got 3 and 4 here, then 1 ABC for 2 over here, then 1, 2, 3, 4, 5 for the third, fourth, and then 1 and 2 and 3, 4, 5 up here. So we'll look at this moving up. It's not the best looking 5 waves of 1, 2, 3, 4, 5 here at the moment. It could be played out a bit differently, but as long as that low stays in place, that's okay. And we can look at this to build. So if you're going to go long here now, then getting at the 5,200 here, 5,200, there'll be 10, 20 and 30. So this 30 here, 230, 230, this will be that's the top of group 1, and it's where the supply starts over here as well. So we really want to look for the first high above the level there if you want to go long at that point. That would be the safe trade at that point, because if I've made a mistake and this is some sort of corrective wave up here as an A and a B and a C wave up here, it's going to hit the supply over here and then drop at that point and come down here and then move up at that point, and we'll have to bring wave 4 over here. So doing having the long trade on subgroup 1 would be the way forward here, and within this we've got 210. I'll just put the other level in here because there's 1, 2 and 3 here to make group 1, and then the midpoint 5. So basically the Fibonacci sequence is 1, 2, 3, 5 and 8 here for this. I always call 8 a profit taking number, but we'll be looking up the bigger picture here, as I mentioned before, would be looking up into this space here for this. Wave 3 normally comes in around the previous highs, all that sort of stuff, all the basics, and yeah, and this one over here and so on. So this will be our sort of we don't want that one, we want this one here, we want this one. We can adjust that to make it below or above. We'll just see how that sort of plays out at that point. So they're the two things. Now we could take this stop here because we've got these positions in here, so they're kind of a little bit of profit there, break even type of thing. Let me just clean up my mess. I'm probably one of the messiest chartists you'll ever see, but yeah, it's hard to be perfect. So we could move this stop if you're not overextended and place it under here if you wanted to at this point. So we've got tech stocks moving up, and yeah, so they're all the So one of the sort of main ones that are moving up is Meta platforms here as well. So we've got started to get a nice impulse wave here for this, and we've got this correction here and so on. Nvidia won't be too far behind and so on. So anyway, that's the S&P. Okay, so that's the big picture and the small picture. Then we come over to the NASDAQ, and this is a weekly chart, and this is counted differently here, because we don't have an overlap in this here overlaps in the S&P, but it doesn't overlap here. There are different ways to count this up here, so I may or may not be correct in all of this, but there's a few things that we could see here that are pretty obvious to the eye here. We can see, like the S&P, is that we've moved quite strongly here and it's sort of churned away through here, but you can see that it's kind of curling over here. So there is weakness in this trend. So we're quite close to a top here, and it's quite normal for a market to react at the previous highs over here, and it hasn't really done that. It's been quite sort of strong. So at some point it's likely to come back into the fold here for this. So yes, it's basically the same count. We're coming up for wave 3 over here for the S&P and also for the NASDAQ as well. So let's go into the daily chart and just have a bit of a look at this. So this would be wave 2 on the S&P here, right? So this little trend up here we've got as 1 and 2 and 1 and 2 and 1, 2, 3, 4, 5 for the third wave, the fourth wave, and then we've got the fifth wave up here. Now this is where it gets a little bit sort of complicated over here, because we've got overlapping wave structures in this space. But the important point here, and we'll have to take a closer look at that, but the important point here, this is the bigger picture here. So we're looking for the extensions in wave 3. Doesn't matter where you put wave 3. You could put wave 3 over here, you could put it here, you could put it over here. It doesn't matter. We'll talk about that in a minute. But the main point here is that we've got 1, 2, 3, 4, 5 here. All right. So the extension is in the third wave here. So when you get the extension in the third wave, it makes this wave 5 here, 4 to 5 up here, roughly the same size as wave 1. Take that with a pinch of salt, but that kind of gives you a bit of perspective on the ratios of what to look for. So there's half a silly chance that we can get to the 20,000 at this point. Now this little concoction in here, I'll just go into the 20K here. I think it was in here somewhere. So I've been working through this in terms of having wave 3 here with an A and a B and a C. And the reason that I've done that for, like I said, this could all be counted differently. Like I said, you can put, and thanks for everybody sending in different wave counts. It is helpful. So you could put wave 3 here, you could put wave 3 here, you could put wave 3 here. The reason that I have it here, and it may be correct and it may not be correct, is just a simple point of stocks. My platform's resetting at 9 o'clock, so I might just pause this for a couple of... Okay, it's probably still resetting. It's because of this, say with Facebook here, as an A and a B and a C wave over here for this, right? So it's this type of pattern here, this A, B, C pattern here, and it's this A, B, C pattern here, and we can also see it across other markets as well. This is Nvidia here as an A and a B and a C wave over here. I don't know if it's finished or not. We're just sort of, I'm a bit Arthur Martha about this one at the moment, but we're close here. But the point being is this particular correction here hasn't taken out the top here. So this is the sort of pattern that I'm sort of working with in this regard here. But yeah, this could be counted differently here for sure. And I was looking at it on let me just get this trading view thing in place here for this, and we'll just have a look at the NASDAQ and a couple of those sort of counts, but I'll just get this set in here because I'll be using it later in other videos. So that's NASDAQ over here. So I'm just going to use a line chart here just to make it sort of simple, and this is weekly chart here, the W here. So we've got 1 and 2, 1 and 2, 3, 4, 5, I'm going up for 5, 4 and 5 up here basically, and then we're going to go into the daily chart here just to so we've got 1 and 2 here and then 3, 4 here, and then we're coming up into this little area here, and this is the area that we want to talk about in here. Yeah, Bitcoin's got the same count basically as that's the what's the names, and then we go into the hourly chart because we just want to focus in around here, so picking it up from this wave 4 here. So if we go into the 4-hour chart here, just to get a bit of perspective here, we've got wave 4 here. So here we've got wave 1 and 2 and 1 and 2, and we can see you've got 1, 2, 3, 4, 5 here. It's pretty simple, wave 4. So I'll just go from 4-hour into, maybe I won't burn up time, so I'll just go to the hourly chart here and look at this here. So we've got that wave 4 here, we've got wave 1 and 2 here, and 1 and 2, and you can see here we've got 1, 2, 3, 4, 5 here, and we've got wave 4 here, and this is where the maelstrom in a teacup kind of comes into play here. So I've got wave 3 here, but you can put it over here, and you could probably look at this as an A, B, C, D, and E over here, and put this over to here and put that over to here, and look at this as wave 1 and 2. That's a possibility at that point. You could put this over here, and you could put this over to this point here, and put wave 3 and 4 here, and wiggle it out of this way here as wave 1 here with an ABC here for what's the name for 2 and 3, and ABC for 4 and up for 5. But the thing is to understand here is that we are at number 18 here, the number 8, and the number 8 is really important. It's, to me, it's the third strongest number after 1, 5, and 8. When you're looking at this here, and we always call 8 a profit taking number, and you can see that the market is nice and clean here, and then it gets all sort of, starts to build up, it starts to lock in around that number. So when you put 18 here, just roughly, you can see that it's really compressing it down at this point, that stops it here, and then it stops it here, and it won't let go of it here. It's really locked. And so when this is what happens at large numbers, the market, the number becomes like a magnet, and it attracts all the orders to that particular number, and that's what's going on here. And so sometimes you've got to be a bit philosophical and sort of read through the lines a little bit. The way that I read through the lines is I try to get a consensus off all the stocks, and this is it here at the moment. But yeah, it could certainly, I just don't have 5 waves up here, I mean, I could get 5 waves out of here. I'd have to look at this as an A, B, C, D, and E in here, and then put that, this, no, still not going to work, is it? I could put it over here and look at this as an A and a B and a C, D, E. Yeah, I don't know. It's just weird, Anyway, just to let you know that there are other counts. I may not have it right. It doesn't matter. The other final point about this is that at the 18,000, or the number 8 as I always call it, is that it was resistance, and then they had a battle here, and the outcome of that battle is that the market has gravitated towards being support above the number and not below it. So it's basically the bulls that are winning out. So all you need to do now is buy new highs. So that's the thing here. So it doesn't really look like a nice 5 waves up here. It looks like 3 waves. It could be up for 1 and back for 2 and up. We could actually go long at this point, or even long at this point if you wish. It could be a little bit of a trap because we haven't really come down. I mean, this whole correction here has been in 3 waves. So 3 waves here, 3 waves here, an A and a B and a C, probably a WXY here would also do the same, do a better job actually. But we could actually come down here because there's some markets like Nvidia, for example, that still need to have another little move down here. It doesn't have to, but the way that it's played out here, it's possible for it to do that. So I always look at the worst case scenario. You could go long above here because if this is 3 waves here, then anything above this top, then it becomes something else. It's not the 3 waves at that point. If you want a safe trade, then be on top of Group 1, because all of this here, all across the top here, 18,000, and then Group 1, 1, 2, and 3 at 300 here. The market's been trying to find support on that, and it hasn't. It couldn't do it here. And when we say support, we're looking at something like this. We take the first high, and then we drop down, and then we drop down at that point, and this is what we're doing over here with this as well, because we would have had this over here before and then brought it down to here, and we can bring it down to here. But the safe trade would be a classic trading levels pattern on 18.3, or you can be brave and get a smaller position here. But let's say that you got a smaller position here, then you want to be able to hold it till it does that as well. So you don't want to overtrade at that point. So if you're normally trading 3 contracts, just trade 1 and hold it through this. And the reason I say that for is because all of this is a corrective pattern and we need to move to the upside. Okay, that's the NASDAQ, and we come over to the Russell. And the only thing with the Russell I can see is we've got 1, 2, 3, 4, 5. This is, you know, like a daily chart here. Basically, it's on 50k ticks, but it doesn't matter. So we've got 5 waves up, and then we've got an A and a B and a C here that we could look for wave 2. It's not a very good wave 2, but it's sort of okay-ish at this point. And all of this move to the upside here is a little bit tricky. The other thing I wanted to say too is from the top here to the bottom here, we're at the 210 here, we're right on the 61.8%. So we're really seeing it push the market down, you know, back into this number here. But I'm bullish because we're above the number and not below it, you know, and in a way, you know, we could come back down and drop below it here. And this is also, I'm not sure the best way to count this in here as well. This is a bit of an issue. I've got it as 1 and 2 here, and 3 here, and 4 here, and 5 here. So really all this news or whatever it was in here, I'm kind of just ignoring it. And when you think about it, the main traffic for the trend is really in this little channel here, you know, so I'm not so fussed about it jumping out and you know, destroying my main structure here. So 1 and 2 and 3 and 4 and 5 would be about right. But yeah, you could count this in any way that you wanted to, really. So but I'm just sort of trying to, you know, smooth it out and be a bit philosophical about it. So we've got 5 waves up to here, so we've probably got 1 and 2 at this point within this space here as well. This market hasn't been traveling very well, but the thing is that it was resistance here and here, it was resistance, and now it's gravitated over to support. So, you know, I don't know if it's going to go straight up from here, we're going to be looking at that, or we're going to come down here first and then go up here, a bit of a shakeout. So I don't know the answer to that, but basically that's sort of where we are at the moment. And yeah, so if we go into 1000 ticks just to have a look at that move up from the low here as 1 and 2, and I've got as 1 and 2 and 3 and 4 and 5. Now once again, like I said, this thing here could be interpreted in different ways, but if I kind of ignore it and just look at the main traffic through here, then these little tiffy spasms here, I don't sort of, you know, I can leave them out of that analysis. What I don't know at this point is that do we go straight up from here, or do we have this as an A and a B and a C wave here and then go up? That's what I don't understand at this point. So on the 100 ticks here that we looked at yesterday, I have lifted it up 1 degree of structure. We had a blue wave 2 here yesterday, so I need to redo this here, but it can count quite nice. Well, it's got this gap here, so it's a little bit hard to sort of figure what's going on in here, but I can get 1, 2 here, 1, 2, 3, 4, 5 for third, fourth, fifth, a little B wave here, 1 and 2 and 3, 4, and then down, and then 1, 2, 3, 4, 5 here. So I can get an ABC out of this, but you could see it as a 5-wave structure as well, I guess, because I don't know what's sort of in here. But anyway, so it's a bit of a thing, you know, so to go long is a bit tricky. But here so far we do have, if I leave out this spike here, I'm not sure if that was from this CFD provider or the futures market, but 1 and 2 here, and then 1, 2, 3, 4, 5 for third wave, fourth wave, and fifth wave here. So it does appear that we've got 5 waves here, so you could actually go long across this top here if you wish. How far that gets you is the thing I don't know, because we could end up having an A wave, a B wave, and a C wave for the B wave here, and then come down here for the wave 2 and then move off. That's what I'm not quite sure about at this point. So you're going to have to try to get the trade to break even, or just take the money off the table once the gap is closed. And at the same time, we'll look for 1, 2, 3 up here, and 4 and 5 up here. Because once we've got those 5 waves here, 3, 4, 5, be something like that, then we can look at the ABC pattern at that point and then go up, you know, over here. So I don't have all the answers for this at the moment. The DAX is very much like the the S&P 500 and the US banks and those sort of things. So we've had a sharp drop here, so it may not be this wave 4 here, because I can still see this as 1 and 2 here, and I could have this as a smaller wave 4 in here basically, but I'm pretty comfortable with this one at the moment, so I will just use that. But basically 1 and 2 and 1 and 2, and we're going up for the third wave, like like most of the other markets really. So yeah, so that's that, and we'll look at 5 and then 4 and then 5. So this, in the bigger picture, that's what we're looking at in a nutshell. I mean, obviously it's when you go when you jump in the water, it's a different fish. So let's go from here to, I don't need to go to 20k, I'll just go to 1k. I think we've got this in here. So let's just go back a little bit in here, just pick up the thread. Anyway, 1 and 2 here, and from wave 2 here we've got 1 and 2 and 1 2 3 4, 1 2 3 4 5 for third, fourth, and then this could be a little bit tricky here, but I got 1 and 2 and 3 and 4 and 5 here, then 1 2 3 4 5. So yeah, you could throw stuff at me for that for sure. The other point here is that let me just double check this. This would be, I'm just wondering what, what this, I can label this as an A and a B and a C wave here with 1 2 3 4 5. But if it was going to be a little bit differently, if it was going to be different, if this was going to be, because what it could be here is that this could be all of the A wave down here and then the B wave over here, and the A wave might even come over here, because this could be 1 2 3 4 here back at the 38.2% retracement level here. It looks like it wants to go up. This is a corrective pattern in here, so it looks like it wants to go up. So I'll just sort of stay with this for the time being. I think we're pretty close to being on the money here. This would be 1 2 3 4 5 for 1 and 2. So yeah, if I was going to, I think we're good to go here actually. We're looking to talk about long trades here yesterday, so we can do that on here, because if this became the support here with a little classic trading levels pattern here, this type of thing, the first high above the level, if we got that at the 400, that would put it above the 38.2%, because the 38.2% is right here at the moment, So this could be 1 2 3 4 here and going down, but I can see this would be 1 2 3 4 5. So we've got this as 1 and 2 here and 1 and 2, because this is corrective here, and I can see 1 2 3 4 5 here. So yeah, so this is looking bullish to me. You could go long above that little B wave there too, I guess, but that's where the risk comes in. This is a safer trade here because because it takes it past this ABC pattern here. Yeah, so we're pretty good to go at this point with this, and the best way to label this would be, well, we know that which wave 4 we got there, so right, so we need if I do it really conservative, because there's different ways to count everything, I'd still need wave 3 up here, 1 2 3. And then 4. So this is the most conservative count, okay? And then wave 5 would take us up here higher. This is the most conservative count. And then this here can come as wave 1 and 2 in here. So don't be surprised if I extend it out a bit later, But, I just like to move safely. So it would be something like that. Probably put that up there. So, yeah, there was one news thing coming out, not so much for the DAX, but for the US markets in the next session. Anyway, I think it's something like that. So you also, as always, what you can, we know that you know the trading levels, 1 2 3, there's 5 here, 5 here, and so on. But always too, it's just good to put this situation here so you can kind of see what sort of doubling up as ratios here. So So the 400 is going to be a little bit sticky in here because it's the 38. You can see the 23.6 has come right across here, so it was the resistance and now it's the support. So it's handling this number. So because it handled this one, it will probably need to do the same here. So then here will be important, but you can always gravitate over to the 400. So you can be assured that the 400 is going to give you grief at that point. And the 450 over here, this where you can see this at the 50% here is going to give you a hard time here as well. So that will push that, give you the first, that will give you the first high above that 50% there. Will give you the 18,437, probably 8, anywhere between 35 and 38 will give you a hard time at that point. Push it back to the 400. And give you that first high above the level at that point. And obviously all of this up here, 61.8% is going to is going to be a tough nut in here as well. So all through here, which is close to the 5. So you just, if you're just aware of those, because basically this is the whole supply, this whole supply area over here, all of this here is the supply. It's going to give you grief, but you'll be able to centralize it in at the, be the 61.8% and well, not the 61, but 60, 65, even higher. But it's all about this number. This number here is going to, you're going to have patience to get here. If you're going to take profit, then getting here before this is where you'd want to be, take money off the table at. Okay, so that's the DAX. And then the FTSE over here. It's still got the October-November lows with the S&P 500 and the other markets. It's just, and it's sort of, it's kind of with the banks really, with the banking system here in terms of timing, So we've got 1 and 2, 1 and 2, 1 and 2 here, and there's a little bit of a cacophony in here. So it might be, I might need to put wave 3 over here at the end of the day, but I'll just leave it there for the time being. But this is much the same pattern as the banking sector. I haven't looked at Barclays and all the rest of it at this point, but I can see that's in line with Morgan's at least. Bank of America is a little bit different, but still bullish. Yeah, so that's where we are, and we've hit 8,000 and. We're creating a double top. And the other thing is double tops are never the end of the trend. So we will be going higher, but it's going to be a bit of a tough nut because this is a big number and we've got an old high here and all the rest of it. So it's going to be overlapping wave structures and a bit of a struggle to get up through here. You see all this in here, this 1, 2, all of this in here, this block here. If you could imagine that sort of flipped over on its head and put it over here, that's what we're going to be up against. So what this could do in here for you is lose you a lot of money in here. You either stand back from it and allow it to be, and yeah, but probably CFDs are not such a great idea at this point because it will chew up a lot of time. So if there's an ETF or other stocks you can be in to get through this, yeah, because there's basically a beginning, a middle, and an end to a trend, and in this case, this is 1, 2, 1, 2, 1, 2 here, and this will be 1, 2, and here. So this is the middle of the trend. That's the middle. So we're coming into the later stages of the trend here at this stage. Still not there, but I mean, taking that 2 to 3 here. But this is where you start getting this up here. Okay. Anyway, I've said there. You've been told, and over to 1,000 ticks here. So we've got a couple of positions in here. We were kind of going to take a bit of profit and all those sort of things. We've got wave 2 here. We're going up for wave 3 here. And in that, we've got blue 1 and blue 2. And then we've got green 1, 2, 3, 4. So we've got wave 2 here to wave 3 up here. So here, this is a little bit behind the other markets, but that's sort of okay as well. I might need to change a few things later. I could reinvestigate all this and bring this wave 3 over to here, but it won't make any difference because there's still 3s and 4s in the meantime. It does look a little bit impulsive down here, but it doesn't really matter too much. It's pulled back to where it should have pulled back to from yesterday. And I'll just have a quick look in here. It does look a bit 5 wave-ish in here. So we may end up, it doesn't look like we've got a B wave up there. So in this case, we might push up here and then push back again. But the thing is that yeah, Thursday could do that and Friday could be up. So we might be over here for that. But it doesn't matter. We're just going to leave our stop out of the way here. And we'll take sort of part profit up here somewhere. But this is where it starts to get, you know, overlappy and messy and all those sort of things in here. So, and I might need to shorten this up, you know, as I just mentioned, and put this here. So I've got this as an alternative wave 3 here. So I'm just going to do this to the same one over here. Because I need to tighten it up, because basically all the indices, well, generally they'll all sort of move together, you know, they're all looking at each other. So that's the FTSE, and then we come over to the Australian market. And also too, while we're here, I want to go into this is the XTL here, the top 20. We went over this yesterday, but basically from this, we've been looking at this here, this top area here. I just want to talk about this. We're looking at it as a wave 3 here with an A, B, and C here. Now, with the ASX200, this move down here didn't move down as much. Now, this move up here is looking like an ABC pattern here. So we'll have to put, there's two things that could go on here. What I want to say is that we could put wave 5 here as wave 3, 4, and 5 and have a top in play here. That's possible. Or we'll put this up here. Because the US markets and the US stocks and all that need to move up further, so like meta platforms here as 1, 2 in here somewhere, 3, 4, 5 need to move up here further. I think that's where we need to go with this market here as well, as 1, 2, 3, 4, 5 up here. So this will give us a little A, B, and C pattern in here. Looks like 5 waves down, so we'll have to look at it like that. But this having wave 3 and 4 here, it looks quite sensible to do that here. But when we look at it on this market, if I just get some, oh, I don't need to get some things in. This is the A wave, the B wave, and the C wave here. That's basically what we're looking at, because I don't have 5 waves up there. I can't fit it in. So that means that this trend that we've been in here so far, we'll need to look at this as as wave 1 up here, as 1, 2, 3, 4, 5. And this is overlapping wave structures in here, so that could be counted differently, but I think this is our best bet. So the thing here is that we can look at this as the A wave and the B wave here, and then 1, 2, 3, 4. So I think on Thursday today, we can have one more move down here before we go up. So I did have the stop in terms of here, you'll have to make your decision. So I always wait for the first spike below the level and then put the stop there. So we could put the stop there, but you'll probably be stopped out. So I don't know if you want to go down under the next one here and hold that out through these. I don't know. You do what you need to do at this point. So look, we could go straight up from here, but I just don't see this. This is ending in 3 waves here, 1, 2, 3. So we'll see how it goes. But yeah. So that's that. And I just wanted to have a look at the same pattern on CommBank as well here. So I wanted to just change this a bit. Now I know Shane's got a different pattern for a different count for this particular market. And he's got like a wave 4 over here, and I see that, I get that, it fits, it counts, but I kind of want to drag this in line with the US banks as well, and the S&P and all the rest of it. So looking at this as 1 and 2 and 1 and 2 here, and then 3 here, and this here is an A wave here, a B wave up here, and a C wave here. It's probably better off as a WXY, but it also looks like a running flat. So I'm thinking this is wave 1 and wave 2 coming back to this point. Now I'm not totally sure about this, so but yeah, just sort of, and then this would be 1, 2, 3, 4, 5. So this 5 up here, this would be in line with the S&P and the banks and all that at that stage, and then we go into wave 4 at that stage. So yeah, but anyway, just sort of looking at that like that, how the banks are sort of fitting into that. Just have a look at, I'm not sure what I've done on the bigger picture here. Yeah, so this is 1 degree smaller here, but basically the same sort of thing here. So in this case, we'll look at this as 1 and back for 2 here, and 3, 4, 5, just to sort of, it's just a bigger picture here than this 1, 2 at this point. yeah, so it's a little bit of a tricky situation in here, and I think we had this on the 1 day here. I think we already talked about this before. So yeah, 3, the A, the B, and the C for wave 4 there. Could put it 1 degree smaller, but so yes, so this is 1 degree higher here. But so we could put the top in here. That would be suitable. But the rest of the markets need to move up, so I think we need to put this in here and here. And I just not quite sure about how that's going to play out in here. And then obviously the 8,000 is going to be a bit sticky and all that sort of stuff, you know. So even though we've been in this trade here, we probably, if we get a nice ABC here and I can see it, we might have an intraday trade here, but we probably won't get involved in too much of this. We will be pretty much waiting, I think, to get this sort of ABC pattern here for this. And this will occur here. That will occur there when the S&P over here, not this one, but the S&P here, if we just go back to the daily chart here for a moment. It'll be when this one plays out here, I think this wave 4 here. This one here, this larger wave 4 here. I think that's when that will play. Anyway, I'll get the timing right on that for us. But I've got to drag this into the rest of the world somehow. Okay, I'm going to leave it at that. Thanks for, well, such a long video. Sorry about that. Alrighty, thanks for tuning in. Cheers.